Hi, this is Dr. Trader. This week we're looking at Eurodollar. The Fed held rates steady this week, with 3 dissents inside the committee, and the dollar posted its sharpest 2-week drop. The euro jumped to a 2-week high, pushing Eurodollar up to 1.14574. But Federal Reserve Chair Kevin Warsh made clear this is not the end of the story, and the U.S. 10-year real yield is still sitting at 2.43%. According to NEXUS, the bias on Eurodollar this week stays bearish. Conviction is medium. Here's the sequence this week. The Fed held its FOMC meeting, kept rates unchanged, but 3 members dissented. Right after, the dollar had its worst 2-week stretch. Federal Reserve Chair Kevin Warsh said the Fed's work is still in progress, the underlying consensus holds, and this isn't the end of the story. Separately, commentary this week noted the bond market is doing some of the Fed's tightening for it, long-end yields staying elevated without another hike. As of Thursday morning, July 30th, Eurodollar trades at 1.14574, above the weekly VWAP at 1.13779. NEXUS keeps the overall bias bearish on Eurodollar, with medium conviction. And here's why it's medium, not high. The case is backed by macro and by the multi-timeframe technical structure, both leaning down. But liquidity and sentiment triggered no signals this week, so it's missing confirmation from 2 full layers of evidence. A soft core CPI print earlier this month adds to that uncertainty, without reversing the regime. 2 conditions matter. The first is already true right now. Price sits above the weekly VWAP, running against this thesis today. Reduce size now. The second hasn't happened yet. A weekly close above the TrendSL at 1.15616 would fully invalidate the bearish structure and call for an exit. Now the real intermarket picture. Eurodollar against the wider macro landscape, not just its own timeframes. The strongest driver here is the rate differential between the ECB and the Fed. That gap, plus a U.S. 10-year real yield of 2.43%, gives investors a structural incentive to hold dollars over euros. The broader dollar index carries the heaviest weight in this model, still pointing bearish for Eurodollar, even without an exact DXY level in the brief to cite. One more flag. COT positioning reads bullish this week, but without a report week or net position figure behind it, treat it as directional color only, not a citable number. On the chart, Eurodollar is at 1.14574. Weekly VWAP sits at 1.13779. Price is roughly 80 pips above it, an equilibrium zone, not a fixed support or resistance line, and momentum is on the wrong side of it for this bearish thesis. Weekly TrendSL sits at 1.15616. Price is about 104 pips below that, so the bearish structure remains intact. Multi-timeframe alignment stays all bearish, even with this week's bounce. There's no Fibonacci or Elliott wave count here. The data behind this analysis does not support one, so we're not inventing it. 2 big U.S. releases land today, July 30th, per Forex Factory calendar data. A secondary source, not an official government confirmation. Advanced GDP, quarter-over-quarter, and Core PCE, month-over-month, the Fed's preferred inflation gauge. Both are marked high impact for the dollar. Strong data, and the dollar could recover, with Eurodollar fading back toward the VWAP. Weak data, and Eurodollar could extend toward the TrendSL at 1.15616. Mixed data, expect a choppier reaction. These are directional reads only, not hard probabilities. And remember, a weekly close above 1.15616 still breaks this entire bearish structure. To sum up, NEXUS keeps a bearish bias on Eurodollar with medium conviction. Intermarket and cross-timeframe factors both favor the sellers, but short-term price action and COT are pushing back directly. Eurodollar is testing the weekly VWAP from above, right before 2 major U.S. data points. Thanks for watching. This is a weekly analysis built from the NEXUS research engine at Intermarket Edge. Follow the channel for more macro and intermarket analysis. This content is for informational and educational purposes only, not investment advice.